So welcome back to the Business War Room. I'm your host, Vinny J. All right, I want you to settle in because we're about to dissect a financial theory that's got Wall Street buzzing and Main Street scratching their heads. For those that don't know, we're talking about modern monetary theory, or MMT for short. Now, I'm here to tell you, it's neither modern nor monetary nor a theory. It's actually a dangerous cocktail of wishful thinking and economic ignorance. And I'm here to break it down for you, my savvy entrepreneurs and investors, in a way you can understand. So let's begin with the MMT pitch. Is it a free lunch? MMT's core idea is that a government that issues its own currency, like the US dollar, can never run out of money. They can print as much as they want to fund whatever they want: healthcare, education, infrastructure, you name it. Sounds like a dream, right? Well, as my Italian grandmother used to say, if it sounds too good to be true, it probably is. This theory is what I call the inflation monster. The biggest problem with modern monetary theory is that it ignores the fundamental law of economics, supply and demand. When you flood the market with money, the value of that money goes down. It's like printing 1 million copies of a rare comic book. Suddenly, it's not so rare anymore. This leads to inflation, where prices for goods and services skyrocket, eroding your purchasing power and wiping out your investments. We've all seen this play out in history. Look at Venezuela, where rampant money printing has led to hyperinflation, making their currency virtually worthless. Or Zimbabwe, where they printed so much money that they had to issue a $100 trillion bill. These aren't theoretical examples. They're real-world disasters caused by the kind of thinking MMT promises. Now, I'm sure you all heard of the debt trap. MMT's proponents argue that government debt doesn't matter because we owe it to ourselves. But that's a dangerous fallacy. When the government runs up massive debts, it has to pay interest on that debt. That interest comes from your tax dollars, leaving less money for essential services or, tax cuts that might actually benefit businesses and entrepreneurs. Furthermore, if investors lose faith in a government's ability to repay its debt, they'll demand higher interest rates, making it even more expensive for the government to borrow. This can lead to a debt spiral where the government has to borrow more and more just to pay the interest on its existing debt. Modern monetary theory assumes that the economy can absorb all this new money without any negative consequence. But that's not true. If the economy isn't growing at the same rate as the money supply, you're going to have problems. You need real productivity gains, new inventions, new technologies, new businesses to create the goods and services that all this new money is supposed to buy. Without that, you're just creating inflation. Now on to Wall Street's take on this matter. Now I know what you're thinking. This sounds like a bunch of academic mumbo jumbo, but this stuff has real world consequences for your investments. If inflation takes off, your stocks are going to take a hit. If interest rates rise, your bonds are going to lose value. And if the economy tanks, well, we all know what happens then. So what can you do about it? First and foremost, educate yourself. Don't just take my word for it. Do your own research. Read the modern monetary proponents, and then read the critics. Understand the arguments on both sides. Second, always diversify your investments. Don't put all your eggs in one basket. Spread your money across different asset classes like stocks, bonds, and real estate. This will help you weather any economic storm. And third, stay informed. Keep up with the news and pay attention to what's happening in the economy. This will help you make informed decisions. And finally, don't be afraid to ask questions. Talk to a financial advisor. Get their take on modern monetary theory and how it might affect your portfolio. Remember, knowledge is power. The more you understand about economics and finance, the better equipped you'll be to protect your investments and grow your wealth. So let's ditch the modern monetary theory fantasy and focus on the real world, where hard work, innovation, and sound financial principles are the key to success. I want to thank you all for tuning in to another great episode of the Business War Room Podcast. Subscribe to the podcast, like us up on social media, share this episode, and we'll see you all on the next episode. Peace.